It's Friday. Yes, it is. Friday, November 21st, 2025. Futures Brizio here. We're going to look at the markets every morning like the way we do. We're about an hour plus or so into today's North American session. And so let's jump right in. As always, smash the like button, subscribe to the channel. Any questions, comments, leave them down below. Okay, so we'll just jump right in. So this is soybeans. As I've been saying, we do have this zone here. This is a 1 hour zone, so it's not the most critical type zone, but we can see price sitting at the bottom edge of this zone as of the open today on this opening candle. Actually, this is the well, basically the second candle since the market opened, and we're sitting right at the bottom. And so, again, that does not mean that price is just going to bounce there and go higher by any means. But you can see this was the big bearish candle last week, a week ago today, that led to this swing low that led up to this high. Now we're right back at it again. Now, if price breaks through here and we don't get a bounce, then of course we start looking at our next levels down, and we've got this one right here. We had again a big bearish candle that led to a new high, and then we've got this one down here. So we certainly have more layers of support here. So this one is just the current one. So I'm just not going to trade it from here. When it's inside of these zones like this, I'm not going to short because there could be a very reactive move off of this zone to go higher. Although, admittedly, this would be basically, a 100% retracement, and you just don't see that very often. Usually it's some kind of, Fibonacci level or what have you that the price kind of comes into and then reverses to resume the trend. When we come into these zones like this, 100% retracement, yes, it's possible it will bounce off here, but it could just as easily break low. But either way, I'm just not comfortable selling it inside these zones. But of course, I'm not going to buy it and try to pick a bottom either because it could easily smash through here and continue to head lower. If it does break out, this is a 4 hour chart. You could certainly target this next level down here. That's not a bad little trade. It doesn't look like a lot, but remember, this is again is a 4 hour chart. And then the next real kind of swing was down here, and that's quite a ways away. So, it's probably a pretty high chance I won't trade soybeans today just because of the time. It's a Friday and of the way it's looking right now. But you can see that, buyers are trying to scoop up bargains right here. That's why this candle is just jumping up and down. There's a lot of sellers are trying to push it lower, breakout traders, but of course buyers are trying to jump in here and swing this thing back up too. I have this old price alarm right here. I'm just going to take off the chart. I don't need that. That was from yesterday. And this still represents, on a 30-minute chart, this is still a swing high right here, the major swing high. This is all, inside swing highs within the downtrend. I'm not saying they're not important for reversals because some people will say, if it breaks this high, then I'm going long. But for an overall trend change, longer term, I think the minimum expectation is for it to take out this high up here. Okay. But we're just concentrating on what it's doing right now because obviously we're not going to get up here today. So even if it did break higher. And, so let's see. But either way, I'm not trading this at the moment. Even though it is trying to break out. I'd watch for a false breakout, for this candle to snap through here and then all of a sudden get a big wick and back into the range. If it does that, then, that's how they, draw in breakout traders only to trap them. Okay. Rice. Again, same story with rice. Not spending a lot of time on this. Again, we are sitting at weekly lows right here in this zone. Now you can see if you look back in time, other than this one right here, every time it comes into this zone, it comes in pretty deep, either halfway or all the way in before it bounced, except for this time back here in February of 2019 right here. Okay, so I would not be surprised if this thing continues to push lower into this zone. But again, and so with that being said, because this is a weekly zone, certainly there's opportunity to short it further deep into this zone, because you can see how wide this zone is when you go to a short time frame. This is a 15-minute chart. That's a weekly zone I drew. So on a short time frame, it's going to look like, I mean, this is crazy, right? You could keep trading this down, and it very well may do that. I don't know. So, but for now, I'm not touching it. I'm certainly not going long. And you can see, we are trying to go higher here. This is only a 15-minute chart again. But you can see we haven't even taken out the yesterday's high. We're sitting at about yesterday's high right now. And so let's see what happens. And again, much like soybeans, right? So we've got this, to me, this is the last major swing point was right here. This area generally right up in here where price kind of, pulled back. We had this big bullish candle to sweep liquidity, and then it crashed down for a new low. So ultimately, we would have to take out this high, maybe even this one up here, but probably this one. And before I would consider that to be a longer term trend change. And so, let's see what happens with this. As I've been saying with rice, we are in the time of year where seasonality should play a factor with rice in terms of going higher. Here you go, November through January generally trends up. Okay, so maybe that will eventually play in. You can see prices are trying to go higher, but again, this market has been in a downtrend for like a year and a half. So to pick a bottom right now is probably not smart, because this could easily just, we've had strong pullbacks like this before where it looks very bullish and then all of a sudden it just goes falling flat on its face again. So I'm going to be very patient on this in terms of ever thinking about going long on it. I'd have to see a lot more than just, a 5-minute bullish candle like this. So even though it's sitting in this inside of this zone, like I said, this is a very wide zone, and this could easily come much further down inside this zone. So anyways, just watching rice, but not really doing anything with it at the moment. Sorry, guys. Still trying to get over a cold. So soybean oil, you can see I'm holding a short here, which is in drawdown right now. And, I have a pretty small take profit. And the reason why is because if you zoom out a little bit, this is a bit of a risky trade. I kind of going against my own, some of my own rules as far as levels go. But if you look left, we've got this area around $50 approximately. Well, maybe not that much, maybe 49. I don't know, around between 49.50 and 49.80, where prices found either support or resistance many, many times going back to at least 2023. You can see this area acted as basically a support here, resistance, support, support, resistance, blew through it here. Support, 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 resistance, 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 blew through it here on both sides. Support, resistance, support, right? You get the picture. So this area is obviously very closely watched. So if this does work into profit, I will look to exit this pretty quick if it gets anywhere near these lows. You can see it already did try to go there and was rejected. So this is a pretty risky trade. You can see it's just kind of bouncing along near the highs for today. Even though my stop loss is up above the next swing high, I generally try to put my stop not at the closest swing in case you get, because if I had my stop like sitting right above here, I could get wicked out here very easily. And it's not worth it, for it to go in your favor. But it doesn't mean I'm going to let it necessarily go to my stop loss. If I see this, if I see like a bullish candle paint above this zone and don't just wick to it, then I probably will exit. But This still looks fairly bearish, but I am concerned about the level. This was the candle that rejected off of that level, although that level is a little bit lower down. So I'm just going to watch this. Like I said, I may not let it get to my stop loss. I'm just giving it a little breathing room, but we'll see how it goes. I got to tell you, soybean oil has not been friendly to me the last week or so. I've had trouble making any good trades in soybean oil. So I may, if that keeps up, I may just put it aside and say, you know what, I'll just stick to soybeans and soybean meal. But I'll say that, and then all of a sudden this trade will work out, and I'll be like, oh, cool, everything's fine. So anyway, so we'll see what happens with that. All right, Canadian dollar. Again, same story. 4-hour chart. We are sitting right at a previous level where price reacted off of twice. Here, and now we're basically come back into that area again. And I'll say it once. I've said it a million times. Doesn't mean that price is going to get held up and bounce here. I would not be taking a long from this position. And if we zoom out to a higher time frame, you can clearly see that there are areas well below here where price certainly could reach to. This area right in here, maybe. Then we've got swings down here. All right, so, but it's just that it's sitting inside this zone, and I'm not really too keen on it because it probably will bounce from here. But if you had if I had to put odds on this breaking through this zone eventually and going lower, I'd probably give it about 70% chance that it's going to break through here and go lower just by looking at this longer time frame, the daily chart. But in the meantime, like I said, much like the other markets I showed, when it's inside of these ranges, I just am not comfortable with with this taking a short in here. Excuse me, because there will be a reaction. I mean, whether it's just like a dead cat bounce and we just run up a little bit and then roll over and continue the downtrend, in which case it'll blow right through here. Or whether it's a reversal. I'm just not going to try to, pick that. So right now I have this as the swing, for kind of our trend. I probably will move, if this makes, technically we have put in a new low here outside of this consolidation. So, I probably could move this down here. Say this is our swing now. And we'd have to see a violation of this before I would, think about any long positions. So, and a clean, and when I say a clean break, I mean like a 1-hour candle or better. Because again, you could get a 15-minute chart or a 5-minute chart, and you can show a strong bullish candle through the zone. And you go to a 1-hour chart and you go back, look at it later, and the 1-hour chart shows a big wick. Because remember, an hourly candle is made up of 4 15-minute candles. So one of those 15-minute candles may have been really strong and popped through the zone, but the other 3 did not. And so at the end of the day, that hourly candle is going to reflect that. And so that's, to me personally, I like to see 1-hour candles or higher break through and close above zones before I consider that to be a potential change in direction. So anyways, not going to do much with Canadian dollar today. Excuse me. It is Friday, so most of this stuff probably will quiet down before too long here. So even if we push down to the bottom of this range, that still doesn't negate this zone. You can see we have lows sitting down at the bottom here. And I suspect when it gets down near these lows, it will, which may happen pretty shortly, it will just, we'll bounce from there and probably just move sideways the rest of the day. That's my guess. So not really doing much with that. Soybean meal is kind of the same story. Again, we've got 2 zones here. This is kind of a 1-hour structure. And you can see price has been bouncing along this zone since yesterday, not making any progress into it. And again, guys, I just keep saying, like, there's no magic to this. You can very easily, just with a little bit of practice, just find these swing highs and lows. Now, you can find them on every time frame. I go to a 1-minute chart and I can find zones like this. So, but to me, those are just noise. I want to see these zones, me personally, on a minimum 1 hour chart. And the higher you go up, the more reliable they are in terms of will price react to them or just blow right through them. So here's a 1 hour zone, and you can see price is definitely reacting off of here. If we zoom out, go to the 4 hour. Here's that zone. Doesn't look as impressive on the 4 hour, but still, price rallied off here, pulled back, consolidated, grabbed some liquidity, and then it went higher. So there is some interest in this area clearly because price hasn't moved off of here since yesterday. And then further down, we've got a more meaty zone here on the 4 hour sitting down here. But again, I'm not too interested in selling this right now. It just doesn't really look like it even wants to. You can see it's actually trying to go up now. So, uh, yeah, here's the 5 minute chart. Um, it's just reacting off the zone. So, anyway, so that's about it for soybean meal. And again, I consider this to be the swing high, right up the current swing high here. This is the 30-minute chart. All right, that price would have to violate for any kind of extended move up. If this ultimately goes down and makes a new low, clears this zone, then I probably will move that down to here, even though this is very choppy. It still would be a consolidation area that, price reacted and made a new low off of. So, but you can see, price is reacting off of it right now. So to me, no trade in soybean meal. Corn, I did take a short and I'm already out of it. And I want to show you, if you watched my last couple of videos, you'll know why. Is this right here. I told you guys the last couple of days that there was a price gap sitting right here. And that price probably would wick through this zone and fill that gap. And then we'll see what happens. Now, I'm not saying again that it won't eventually roll over and keep going down. This is still pretty bearish looking price action. But I know it might be a little hard to see, but I'll put the horizontal part of the pointer right underneath this candle. And this is the trade I took that I already exited. And look where it went. Exactly to fill that gap and then bounced up. All right, see where the arrow is to the left and the dotted line, that's the cursor, right? Right to it and bounced, okay? Because the price always just goes and fills those gaps. And now you can see it's bouncing. Now, again, it doesn't mean it's going to reverse and go higher. This is kind of our current swing. I think that's still valid. But you can see we're basically back inside the range. We basically snapped down there, filled the gap, and went back inside the range again. And now we're just moving sideways. And we'll have to see what happens with this. But I'm probably not going to do anything else with corn today. I don't foresee, unless we have a huge bullish move and we clear this high, which I don't think that's going to happen today. Then there'll be nothing. And I'm not really too thrilled about selling this, even though we have now filled the gap. It's just, just not really interest. Then the next, if it does continue lower, I would say the next area of interest is probably sitting, down here somewhere. Something like that. Right? Just something like that. So that would be probably our next target down in this area here, if it does eventually roll back over and go lower. But you can see we're having a pretty bullish reaction right off of that gap fill. So, all right. And lastly, on hogs, this is really a very common theme here we've seen on all these markets, where again we're seeing zones be tested and so far not violated, but doesn't mean they won't be. So here's our swing high on hogs, and you can see we're in this. Well, this is an 8 hour chart. I mean, I guess you could go all the way out to the daily chart. 12 hour, 8 hour, kind of see this. I don't know why that's not changing. showing the same price, the same looking chart. Well, anyways, it doesn't matter. So we've got 1, 2 hits on this zone here, and then multiple hits here. Now, the thing about the zone over here is you can see when it came in here and here, it was one candle, at least on this time frame. One candle wicked and went higher. One candle wicked and went higher. Here now we've had 1, 2, 3, 4, 5. So we're on our 7th candle in this zone. And it keeps trying to pop through, pop through, pop through. That is, on the surface, pretty bearish, because the bulls are not able to just grab liquidity and snap the price higher, right? There's multiple attempts at the bottom of this zone, including the current candle. And the longer that goes on, now again, it could just be a consolidation area where, the bulls, the large players, are just quietly accumulating positions here. And then when they're ready, they'll place a big order, they'll snap some liquidity, and then boom, you'll have a huge bullish candle. It'll start moving higher. So, some people might argue that this is an accumulation zone. I don't know if that's the case or not, but if this clears this zone, which I wouldn't be surprised, because again, we've had multiple attempts on it, as opposed to here and here, we only had single attempts on it, then before it rallied, then, we certainly could go lower, and we do have lower prices. I mean, these are all-time lows sitting down here. I don't know if it'll get that. And actually, if we look left here, even on the weekly chart, this zone right here where prices now has not only been support, but it's acted as resistance in the past. Back here in, this is back, yeah, I don't know. Let's see here. This is February of 25, but this is a weekly chart. I don't think there's that many weeks in here. Well, maybe there is. So it looks like it was back in February we were here. And there was acting as resistance then. Okay, so anyways, so that's it. And you can see on the shorter time frame here, I know it's a little messy with this session indicator. I can turn that off. Make it a little cleaner. And you can see we're just chopping around inside the zone. So, all right. So either way, I'm not doing anything with this. If we break through this zone, we can clear these lows. Then, there might be an opportunity for some more shorting. But we're at pretty low prices now. And there's only been, a couple of times in the past, at least as far back as we have data here, that price has been this low. Has been any lower. That was August of last year and April of this year. Now, this is the December contract. If I could find the continuing chart, you'd probably, we might find lower prices, but you can see we do have extreme lows sitting down here. But it looks like, the buyers are trying to defend this area. And so, let's see what happens. From a standpoint of seasonality, again, we should be, by seasonal trends, we should be entering a higher price time anyways, mid-November through mid-February. We're in, late November now. So, we'll have to see. And again, I know I'm not talking about it because we still don't have data, is commitment of traders. We still do not have COT data. And so we're just going to have to stand by. When I looked the other day, and I don't have it open right now, the COT site said September 30th. Now, it had said September 23rd. So it's like they added 1 week. They went, they threw 1 week in there through September 30th. But, I mean, that's not really helpful. We need the data up to last Friday, and then really we should be getting another update today. So I'm not sure how they're going to handle that. Like I said, if they're going to just, skip all those weeks and eventually just start publishing the current week and just flatline the weeks in between, or if they're going to eventually catch up and load everything in up to the current date. I'm going to keep, I have not checked today, but as of literally yesterday when I checked, it said September 30th, which, like I said, only gets us 1 week of back data, which, that's 2 months ago. That's not really helpful to us right now. So that's it with hogs. Just trading in the range, and that's it. The indicator, guys, this is a MACD. I had it on my chart from last night when I was doing some back testing. That's why I had the session indicator turned on. The MACD is a pretty cool, basic, old-time oscillator. And it does give some good signals for trend continuation, essentially when these crossovers happen. The problem is I find that on higher time frames in many not all markets, but in a lot of markets, if you go to like a 30-minute, 1 hour time frame, and that's kind of like your sweet spot, a lot of times it's going to give you a late entry. Now, in this case, it did not, because when price started going down, yes, it did lead to a big downtrend. It didn't just it chopped around, and so it gave you a signal pretty much about this candle here, but price, chopped around and then it went. But sometimes what you'll see is, and I don't know if I can find an example here. Yeah, here's kind of an example here, just for example. So this is the 30-minute chart of soybeans. You can see you get this huge bearish candle right here. The crossover doesn't actually come on the MACD on this time frame, and I don't mean just when it starts. I mean when it clearly is broken through, until like over here. Now by then you've already missed all of this and this, and granted it kept going down, so all is not lost. But so the bottom line is, when price reacts very aggressively, remember these oscillators, all these indicators are all lagging, okay, because they're using past price data to plot on the chart. So it's lagging. And so that's the lag in action. And sometimes by the time you get a signal, if you get a really big move all of a sudden in one direction and you're waiting for a signal from the oscillator, by the time you get it, the price has already moved and you may be getting in too late. Maybe not. It might still keep going. But so I find that on a lot of markets, so if we take this signal, for instance, and I really wasn't going to cover this, but since I'm talking about it, let's just throw a line here at the crossover on the 30-minute. If we go down to the 5 now and scroll over here on the 5-minute, you can see our crossover on the 5-minute happened way back here, okay, which was a much better signal, okay? You only, look how much sooner you got into this trade. And even on the pullback, you still probably were in profit. Now, you're like, well, that's great. The downside to this is that the shorter time frame you go, the more chance you're going to get false signals where you can get a crossover. In this case, that didn't happen, but this is textbook. You'll get a crossover, and then, so you jump in, like, say, short. Let's say you got a crossover before that. You jump in short, and then, boom, the price keeps going up. And it's not that you were wrong, it's just that you were early. And because the oscillator gave you a signal on the short time frame, but it was premature. So now maybe you get stopped out because you got a stop loss sitting above where you got in. And, ultimately the price goes in your direction. Of course, you can re-enter because then you get the next signal, which turned out to be a good signal. And, as long as you're not psychologically damaged by the first loss, and you can pull the trigger, because that's what happens a lot of times. If you take, especially if it's a big loss, you're going to be, no matter what you say to yourself, trust me, you're going to be hesitant to pull the trigger again because you just took a big loss. Do you want to take it again? And, you got to get back on the pony. If it meets your criteria in your system and you get the signal, you take it. And they're not always going to work out. just don't over leverage your position so you don't take a huge loss, and then you'll be okay. The other thing you could do is just, make sure you don't have your stop loss too close. Put it at a swing, the next swing higher, just to give it some breathing room. Doesn't mean you have to let it get to your stop loss like I was talking about with soybean oil, but you can at least give it some breathing room, and you can always close the trade manually if it starts moving towards the stop loss and you feel like your trade was invalid anyways. So the MACD is really good at giving trend continuation signals, the crossover. I don't have the histogram turned on. I only want to see the MACD and the signal line. There is a histogram on this too. Anybody that's used this, there's a histogram, but I don't use the histogram. It's too noisy. You don't need it, in my opinion. So it's a nice oscillator for trend continuation. Again, like any other indicator, it does lag, and in sideways markets, don't use it because you'll get chopped up, because you're going to get tons and tons of signals back and forth, and most of them will be false signals, and you'll take a bunch of losses. But in a trending market, it's not bad at calling resumptions of the trend. Just understand that depending how reactive the market is and how volatile and how just the flavor of that market, it could give you a late signal. And again, the way you can, quote, fix that is to go to a shorter time frame. But the drawback to that is now you have the risk of more false signals the lower you go. So anyways, I didn't want to cover that. I can cover MACD in more depth if you want. But the MACD is, an old-time oscillator. It's one of the original ones that's been around for decades and decades. But it is, as oscillators go, it's pretty good. And I just use the default settings. 12.26.9 is the default setting. And I just leave it at that. But anyways, didn't really want to get into that. So I'm going to leave it there, guys. Hope everybody has a great day. I'll make a follow-up this afternoon if anything really changes. But at this point, I don't see a lot going on. And so I'm probably just going to leave it here. So, all right. So if I don't talk to you, have a great weekend. I'll be back next week or Sunday night maybe for a recap video or prep video. Next week will be a short week here in the U.S. Next Thursday's Thanksgiving. So there'll probably be basically no trading Thursday and Friday next week. Thursday's Thanksgiving, Friday, day after. Markets probably will be open. I don't know exactly what the schedule is for futures, but the volume is going to be very low either way. In fact, it probably will be low most of next week. So Monday, Tuesday, probably be okay, but you'll probably start seeing a big slowdown on Wednesday. Not to say I won't be looking for trades, but I would have reduced expectations going into next week for volume just because it is a holiday week. So, all right. So that's it, guys. Have a great weekend. Talk to you all soon. Smash that like button. Subscribe to the channel on your way out. Thanks.